Hello, everybody, and welcome to week 15, 16, and 17. Does that sound right? 3 weeks. That's partly my fault. We we should probably do more weekly videos. But we were just talking right before the recording, and we should be at 2,600 at the end of week 17. So we will see how we did this week. Uh, Do you have any comments on the last couple weeks before we start, Steven?
Um, yeah, the market's real down.
It's not great.
I
Yeah.
went on vacation for 1 week and you took the whole market into the toilet.
See, that's what happens. You can't leave the country again. Today it was green, so you know, just stay in the country for a little while. Let us recover some gains, and then sell it off, and then you can go on your vacations again. But okay,
Consumer confidence is heavily vested in my presence in the country.
exactly. Isn't that how the market works? It just all. Anyways, okay, let's take a look at my portfolio first. So at the end of week 17, like we just said, I should have 2,600. We're down. I'm down quite a bit. My crypto took a huge dive. I'm down 7% in my TFSA, so that's not too bad, all things considered. But yeah, crypto is there's still some debate, but I think most people agree it's heavily in the crypto winter right now, and might remain this way for another 2 years until the next Bitcoin halving. But yeah. So, anyways, I bought some Bitcoin and ETH in week 15. So I won't talk about that. But in week 16 and 17, I bought two different shares. So we'll go to my first one. So my first share is Great West Life Co. My strategy moving forward is to buy stocks that are more stable, not so dependent on fast growth, because with the rising interest rates, like we talked about last time, a lot of high growth companies will be facing a lot of difficulties. Plus, Great West Life Co. Is just a good stable buy for a long term hold. Their dividend yield is quite healthy at 5.65%. And in the world dividend, without being too aggressive and getting stocks that have high yields that are unsustainable, 5.65% is actually not bad. So that's why I picked it up. And then in the week after, I bought another stable-ish stock. I'm not gonna say the name. Algonquin Power and Utilities Corp. AQN. Again, this is a stock that won't dramatically change in value overnight. It's one of those stable ones, and again, the dividend yield is over 5%, so it's got quite a healthy dividend payout every year. So, yeah, as we move forward, I'll continue to pick up these less how should I say it? These stocks that are less dependent on growth of the price and more on fixed income.
You mentioned that the high growth companies could face challenges with the rising interest rate environment. Why is that?
That is a very good question, Stephen. So part of the reason the high growth companies are so successful when interest rates are low is because money is cheap to borrow, and high growth company wants to uh, have all this debt, all this financing in order to grow their companies cheaply. When interest rates are really high, obviously they're paying more interest and their cash flow is affected. Plus, there's more risk moving forward. The value proposition is just not as great when things are more costly to do. Um, Whereas some of the more established companies, like the power generation and uh, and the insurance company, um, because they know they're operating long term, they're less likely to be influenced by dramatic interest changes. They might have more hedges. Plus, because they are more mature, there's likely less debt on their balance sheet in the first place. Uh, so those are just some very top level reasons why high growth companies don't do as well in a high interest environment.
I was just watching BNN this week, and they're talking about how a lot of oil and gas companies are actually, because oil prices are up so much, they're
Mm-hmm.
aggressively paying down debt right now too.
Yeah,
Actually, so
yeah,
that's maybe another argument for investing in the oil and gas world
that's a
too.
good point. Yeah, yeah, they've learned their lesson and they haven't over leveraged when they thought times were good. Because yeah, that's what happened to not so much the big oil field players. I mean, they obviously took some hit in 2014 or after 2014, but definitely some of the medium sized and smaller companies thought it would go on forever, and yeah, they couldn't repay their debts and had to shut down. How were your
Uh,
last 3 weeks?
Up and down,
Grammar.
um, down and up, I guess. Cool. Yeah. So my last few weeks have been down and up.
Mm-hmm.
They were very down. Now they're still down, but less down. Overall, I'm down about 6%, with a good chunk of that coming from crypto, but actually more in the equities than crypto for me. I think I probably have a lower crypto weighting than you do. I don't know that for sure, but
My cost is $500, I think.
yeah, mine's only 388, so a little bit less, a little bit lower in the weighting overall, but um, yeah, for my portfolio on a whole, down about 6%. But yeah, like if you look at between the Ethereum ETF and the Bitcoin ETF, Ethereum's down 25% and
Mm-hmm.
Bitcoin's down 12.5. So Bitcoin seems to be rebounding a bit better. Um, yeah, but for the last couple weeks here, well, I was on vacation for week 15, so I didn't do a buy that week. So I did a double buy last week or 2 weeks ago, and then a single buy this last week. So for 2 weeks, for weeks 15 and 16, bought a little bit more in the European index and the US all cap index. Um, and then tech was hit particularly hard in the past few weeks here. So this one, I wasn't actually particularly out of my range for the differential from target weight versus actual for tech, but it was a really good buy just for how down it was, and the indicators looks promising for a rebound. So I bought a couple shares of the tech ETF there, and then my crypto weighting was also down quite a bit, and that's mostly just because the price is tanked. So it made up a smaller proportion of my portfolio at that point. So I bought quite a bit of crypto, and I did do, yeah, this was for 2 weeks, so I put in $200. Plus, I still had some left over from the prior week. And then for last week, my weighting for the indices was the low one. So I mostly put it into there. I got one share of the US all cap, and then 2 shares of the Canadian, I think like top 200 Canadian ETF. And then I had a little bit left over, so I just bought one share of the Bitcoin ETF. So yeah, so nothing crazy. My weighting for energy was a bit low yesterday and is worse now too. The indicators for my two energy ETFs are pretty unfavorable for a buy right now.
Mm-hmm.
Um, so I didn't buy any for last week, but they look like they're maybe cresting a little bit here. Um, so ZCLN, that's the Clean Energy Index. I was actually kind of surprised that this one's kind of keeping pace with the oil and gas one. When like the clean energy market, I think historically has been seen some similar trends to the tech market, just because
Yeah.
it's kind of a similar area.
Yeah.
But interestingly, the clean energy one has been quite closely following the traditional oil and gas patterns here,
That's very interesting.
where they saw a surge at the similar time. Do you like that? We're looking at the clean energy ETF, and they're advertising hybrid vehicles to me. Actually, this was on the oil and gas one, and they're advertising the clean energy. Yeah. But yeah, so yeah, the clean energy and the oil and gas. Well, this is clean energy and oil and gas, both not super favorable patterns for the buy. When I did it yesterday, looks like it's could be going down a little bit now. I think they just hit like a high for some large amount of time. I think it hit like $120 a barrel, which is pretty crazy when you think like 2 years ago, like I think the West Texas was down to like sub 50 at one point, and it's like almost tripled since then, if not tripled, maybe more than tripled. So yeah, oil and gas doing well. That's definitely my highest performing one in my portfolio right now.
Nice.
It's up 30% from, I only bought one share of that ETF, should have bought more, but yeah, it's up 30%. I bought some of this in another account like a year before this, and I think it was sub 40 when I bought it. So I think I've doubled my money in that other account with the shares that I bought of it. But yeah, so we'll see what happens there. Yeah, as long as there's all the embargoes on Russia, and it looks like in general, there's going to be, even if the war were to end, people are pretty much trying to end their reliance on Russian energy. So that is like a substantial portion of the global supply that is kind of off the table, which could keep prices elevated for oil for quite some time. Yeah.
Nice.
Overall, yeah, down 6%. We'll see what happens.
Not bad at all. That's very good. Yes. So moving forward, are you sticking with your weightings? Or are you going to move them around based on the interest rate increase and what's happening with oil and everything?
Probably won't really touch it too much. Yeah, I don't know. I'm pretty happy with it right now.
Okay. Awesome.
I have like 62.5% just in the indices, like the major market indices anyways. So I'm pretty diversified.
Yeah.
I'm not too heavily weighted. I mean, maybe my tech exposure is a little high just because tech also makes up like a giant proportion of the top US stocks too.
Right. Yeah.
But yeah, overall, I feel like I'm like comfortably diversified right now.
Excellent. Did you hear about the Terra Luna crash?
Yeah. So a stable coin, which is supposed to be basically pegged to the US dollar, crashed because I think somebody like exploited their algorithm. So basically they track the US dollar by increasing or decreasing the supply of coins to kind of achieve the target price. And that went awry, and it like basically became worthless super fast, and people lost billions and billions of dollars. Yeah. So that's pretty crazy. And that had a lot to do with the tanking of the crypto market in general, just as people kind of had their confidence shaken a little bit.
A lot of people invested money. It was top 10 at some point as well. So you don't see a lot of this, and there's this was a huge implosion in the crypto world.
If you're
Uh,
gonna be ridiculous with your money, at least diversify your ridiculousness.
some guy will take it as, oh yeah, I'll just split it between Doge and Shiba Inu and like Safe Moon and everything. But yeah, okay, excellent. This is at the end of week 17. We will see everybody next week, and we will try not to jump 2 or 3 weeks from now on. That's our goal, anyways. Cool. See you guys.
See you later.